All right, welcome back to another video. My name is Ian Major. I'm an entrepreneur, investor, and all-around raging capitalist. And in today's video, I'm going to attempt to keep it a little bit shorter, but equally sweet with a really important topic. And this is in direct response to the absolutely face-melting price action we've seen with Bitcoin over the last couple days. Today is Friday, December 18th. And as you can see over the last week, we've seen about a 25% increase in the price of Bitcoin, or more accurately, the exchange rate in dollar terms. It is down a little bit today as it cools off a bit. But the reason I wanted to show this is to help us reflect on the fact that it's only 2020. And what do I mean by that? Let me show you this excellent summary of asset class returns prepared by a guy, Charlie Bilello. I'm not sure if I'm saying that right, but a few things should stand out immediately from this chart. Number one is the absolutely extraordinary gains from Bitcoin relative to every single other asset class on this list. You can see in the very last column here, 204% annualized return over the last 10 years. Versus the next best, which is the US NASDAQ 100 at only 20%. And that is nothing to scoff at by historical terms, but truly, truly mind-numbing performance. And the other thing that's perhaps even more important is the cadence of these returns. And so let's go back all the way to 2012 with this 186% number in the top row with Bitcoin. And so 2012 was the very first halving event of Bitcoin's life. And as we've discussed in prior videos, again, halving is just when, every 4 years, the reward in Bitcoin that miners get for supporting the network and verifying transactions is cut in half. So the reward goes down every 4 years. And what we saw in 2012 was a pretty great return, followed by an absolutely face-melting return in 2013. That in turn was followed by quite a decline in 2014. And so I think you had an all-time high at the time of about 1,100 in 2013. And so that goes down to about a couple $100 in 2014 as the low for that cycle. Now let's fast forward 4 years. So let's go from 2012 to 2016. And lo and behold, 2016, we can see a pretty good return, followed by an absolutely face-melting return, right? And I think that was really the cycle where a lot of folks first started to take notice, and that, of course, again, was followed by a significant decline in 2018. And so you had the sort of low of that cycle happen in 2018, but each of these lows is, of course, higher than the prior steady state. Or said another way, the lows of each cycle are higher than the lows of the prior cycle by quite a margin. Now let's fast forward again from 2016 to 2020, and this was built as of December 11th, so 162% year to date. That's already over 200%, I think, with these last few days. But guess what comes next? That's right. An absolutely face-melting year of 2021. And so, by the way, for those of you who are interested, that cadence happens for a reason. And if you go to Preston Pishes, who's always fantastic, he's got a really excellent Twitter thread here from November 12th, where he goes into the 4-year halving cycle and the 2-week difficulty adjustment, which is something not a lot of folks are aware of that happens. And so he explains how these dynamics impact the supply and demand of Bitcoin in relation to the mining operations. And so these cycles, this volatility is actually built into the system. And so while the magnitude of these ups and downs is, of course, not exactly predictable, the directionality of it is very much predictable, at least in terms of the past few cycles that we've seen. And I've also covered the very good stock to flow model in a prior video, which is another nice way to think about this. So why do I go through all that as the intro? Well, it's to tee up the fact that we are in for a wild ride. The next 12 months is going to be absolutely extraordinary. There's going to be a lot of volatility, but there's also going to be a lot more face-melting price action. And so it's going to be really, really tempting for the average individual, an average investor, to resist, right? It's going to be hard for them to resist the temptation of selling. Now, everyone has their unique situation, so you have to do what you have to do. But what I want to do with the remainder of this video is not lay out the investment case. I've already done that in another video, which I will link down below. In a video titled, "Is it too late to buy Bitcoin?" And my emphatic answer there is no. We're still in the early innings of this. Hopefully that cadence of returns we just saw helps support that. But I want to lay out what is perhaps an even more important reason to be invested in Bitcoin. And that is because it is humanity's best hope for escaping the ever-increasing encroachment of government, bureaucrats, and other entities that wish to control you and have as much power as they possibly can. And so I've gone through this in prior videos, but the current fiat system, its only and sole purpose is to control the money system and therefore control individuals. That's it, right? That is its fit for purpose design to achieve that end. Right? Because it allows governments to print money, spend far more than they otherwise would, which allows them to persist different conflicts. The world wars very arguably wouldn't have been nearly as devastating had sound money prevailed across those time periods. World War I, as we discussed in a prior video, was really the beginning of the end of sound money, at least at the time. Governments, by being able to print more, can spend on policies that earn them votes. U.S. right now, basically the name of the game is divvy people up into groups based on some characteristic, and then create this narrative that some group is suffering and kind of earn votes by explaining why the government can help that group. And ultimately that allows them to build and preserve power in ways that they otherwise wouldn't be able to. And so government is very much left unchecked when we have an unsound fiat system backed by nothing. So what I wanted to go through is an excellent example, my favorite example among an endless list of historical cases where a fiat system has failed and failed miserably. And that is the fall of Rome. This is excellently expounded upon in the Bitcoin Standard. If you haven't read this, what are you waiting for? And if you haven't read it in a while, it's always worth a reread. I enjoy it every time. And so Rome as a case study is extremely interesting. You had Rome existing as a republic for hundreds of years, prospering across that time, in large part thanks to what was at the time the most widely used and consistent sound money system the world had ever seen. And that was largely the denarius, which was a 3.9 gram silver coin. And then later, with Julius Caesar, the 8 gram gold coin, the Arius. And this was just as the Republic was changing into an empire. Even once it became an empire, there was still relative prosperity for another close to 100 years. Part of that was fueled by military conquest, so that should be noted. But ultimately what started to happen was the fraying of the system, caused by the government needing to ratchet up its power and grip on the population. And so what they tried to do initially was coin clipping. And so, these silver and gold coins, literally clipping, so shaving gold and silver content off of these coins to debase the currency. And I think this is the most visceral historical example of what is happening today. Envision that, right? All these thousands upon thousands upon thousands of coins, each having a little bit of shaving, a little bit of shaving, a little bit of shaving, a little bit of shaving over time. the government amasses a literal pile of gold and silver shavings, i.e., they've confiscated a pile of wealth from its citizens, from the money itself. And so, this is a big issue, because if I'm a citizen and I used to be able to buy my month's worth of groceries with a silver coin, I now can't do that because the coin is worth less, because some of the silver has literally been shaven off. And oh, by the way, depending on how I make my living, my income may not have adjusted in the same way as prices now are. And so this creates a massive issue with people feeling like they're getting left behind. Sound familiar? What the government also started to do was subsidizing the price of staples, so things like grain. And before long, you had farmers moving into the city because they were like, well, why am I going to work hard to produce when I could actually have an easier life, make more income by receiving free stuff from the government? And so bit by bit, you had producing citizens transition into the city to leech off of the wealth that the government had confiscated. And so you can see this mechanism at play where the government is confiscating wealth in order to enact policies that give them favor, right, and allow them to preserve that power. And so you have fewer and fewer producers and more, right? So you have fewer producers, lower production, so there's less stuff. And what happens when that happens with this consistent level of demand? Prices have to go up. That, in combination with the currency debasement, leads to significant inflation. And what was even worse was that the government tried to actually hide that inflation with price controls. So they would put price ceilings across a number of goods so that it wouldn't appear to the citizenry that prices are increasing. So they tried to hide what they were doing. And this, of course, backfired massively because the market is pushing for higher prices because of the reasons we just went through. But if the government is capping prices, and you can already imagine how they sold this to the public. Oh, we're trying to, help the common man. These greedy producers are price gouging, and they're selling their goods for too high of a price, right? Does that sound familiar as well? So this is how they sell it to the population. And ultimately, you have a point at which the producers literally cannot produce the good and sell it at that government mandated price and make a living themselves. And so they stop producing. And so you have more of this and more of this and more of this happening, higher and higher and higher taxes, higher and higher inflation, all leeching off of the productive members of society until there are basically too few of them left. People start to leave the city in droves. Don't quote me on this, but I think at one point you basically had as many tax collectors and bureaucrats as you had productive citizens. And so this is just this massive kind of bloated entity. And so people leave in droves. They go to the countryside where at the very least they can eke out a honest living, but they go back to self-sufficiency. And so you collapse the specialization of trade that had built up all of this prosperity. And this event, this whole collapse, was what set the stage for the Dark Ages. Because now you have all these individuals and families, kind of out in the countryside, existing in self-subsistence, where they're ripe for feudal lords to emerge with those piles of silver and gold that they had confiscated to take control of the citizens. And so you had, debasement of currency essentially usher in 1,000 years of horror. And today, while we can't see the silver and gold shavings, the same exact thing is happening. Governments around the world are printing bundles and bundles and bundles of fiat to fuel wars, to perpetuate conflict, to spend more than they otherwise would be able to on policies, to give people free stuff, to in exchange earn votes, and hold and preserve that power. And so the Cantillon effect is essentially what happens when those closest to the monetary spigot, so if money can be easily produced and it's arbitrarily produced by some central authority, those that are closest to that printing that get to spend it and use the money first are at an advantage and are actually transitioning wealth from the broader population that's using that monetary good to themselves, right? Because they're able to spend that money before the broader base loses its purchasing power. And so that's the Cantillon effect. That is the mechanism by which governments, central banks systematically extract value from the broader population of folks using that monetary instrument. And so Bitcoin breaks humanity out of this and is sort of the savior in that regard. It's the best one, by far the best option. And it's a giant middle finger to the fiat system that is systematically confiscating wealth from ordinary people. And what's really tricky about all of this is it happens on a time scale that's hard to perceive within our lifetime. The current system that we're in has been going on for 50 years, and Rome took a couple hundred years to fall. Now, that doesn't mean that it's going to be the same thing and we have 100 plus years to go, because it's happening much, much more rapidly in modern day society. In fact, I want to read an exact excerpt from the Bitcoin Standard regarding the Rome example. So with this fall in the value of its money, the long process of terminal decline of the empire resulted in a cycle that might appear familiar to modern readers. Coin clipping reduced the aureus's real value, so substitute coin clipping for printing incremental units of paper money, which increased the money supply, allowing the emperor or government to continue imprudent overspending, but eventually resulting in inflation and economic crises, which the misguided emperors would attempt to ameliorate via further coin clipping. Ferdinand Lipps summarizes this process with a lesson to modern readers. It should be of interest to modern Keynesian economists as well as to the present generation of investors that although the emperors of Rome frantically tried to manage their economies, sound familiar? Modern monetary theory, all of this is happening. They only succeeded in making matters worse. Price and wage controls and legal tender laws were passed, but it was like trying to hold back the tides. Rioting, corruption, lawlessness, and a mindless mania for speculation and gambling engulfed the empire like a plague. With money so unreliable and debased, speculation in commodities became far more attractive than producing them. And so that's that. When you compromise money, you compromise society. And that is what we're seeing unfold before our very eyes. And Bitcoin is an explicit vote and FU to that existing system. It's not to say that the government isn't going to try and wrap its tentacles around this thing, as we discussed as part of the last video, and as I will continue to discuss in the next couple videos, given how topical that is. But this is, I think, really, really powerful and significant. And so again, everyone has a unique situation. Make your own informed decisions. But when you feel that urge and temptation over these next 12 months to sell from Bitcoin into fiat, just think about what that means on a broader level. And is that something you really want to do? I hope this was useful. I hope you found it interesting. If you did, give it a thumbs up, subscribe, leave a comment down below with any topics you'd like to see covered in future videos. I hope you're all doing well. I'm excited to be along for the ride with you as we go forth over this next year and beyond. And so with that, I wish you all well. Every bit counts, and I'll see you next time.